Hello, everyone. I'm Chris Kapches, CEO of Chestnut Park Real Estate. As you can see from our new sign in our presentation office. And today I'm here to present you the June market report for the Greater Toronto Area as far as the housing resale market goes. And I guess the best way to start it is to say that the market continues to improve as we have seen it improve through the latter part of April into May and now into June. Unfortunately, the improvement is at best a modest improvement, but we must emphasize the positive. It is still an improvement. The other side of this market is when you dig deep into the data, you find that it's very much an uneven marketplace. So I'm going to try and deal with the nuances of that market for you in the time that we have available. Let's look first of all on the improvement side. In June, there were 6,770 properties reported sold, which is an almost 10% improvement compared to the number of properties that were sold last June, 6,191. That is, in my opinion, a wonderful sign in terms of how the market is starting to behave as we move into the second half of 2026. However, that improvement, as I said, is uneven. For example, in the 416, the City of Toronto, the improvement was only 2.8%, whereas in the 905, the improvement was more than 10%. So we're seeing a much better marketplace taking place in the 905 region compared to the 416. The question that you have to ask is, why is that happening? Well, if we look at the numbers, we see that in the case of the 416, the average sale price for all properties sold in the month of June is $1,137,000. And that includes all condominiums, which account for more than 40% of all the properties that were sold in June. If we look at the 905, the average sale price is only $876,500. So we have a huge delta between the average sale price in the 416 and the average sale price in the 905. That is a massive affordability delta, $261,000. So where are people going? Well, it looks like they're going to the less expensive properties in order to find the home that they're looking for, and that seems to be in the 905 region. But if we dig a little deeper, we see the same sort of thing happening in the case of condominium apartments. For example, condominium apartments saw a 14.3% increase in sales compared to last year, both in the case of the 416 as well as the 905 region. Yet if we dig a little deeper, we see that their average sale price in the 416 was 9% less than it was a year ago, and in the 905, over 10% less than it was a year ago. So what does that tell us? Well, it tells us that people are looking for the least affordable properties available on the market, and they're even driving those prices down. So sales are going up in that housing type, but average sale prices continue to come down. It's a bit of a counterintuitive concept, but it is happening in our marketplace. Ultimately, it's a question of affordability, and we'll get into it as we complete this market report. Secondly, I should mention that inventory levels continue to decline as we make our way towards the second half of 2026. In the month of June, 17,282 properties came to market, which is almost a 13% decline compared to the same number of properties that came to market last June. As a result of that, as we move into July and into the second half of the year, we're moving into a marketplace where buyers have a choice of 27,329 properties, which is about 13% less than what they had last year. So we see this decline, but I do feel compelled to put this into a historical perspective. I look back to what was happening in 2019 in June, the year before the pandemic. And when we look at those numbers, we see that there was a substantially less number of properties available to buyers at that time, approximately only about 19,000 compared to the 27,000 plus today. Again, a huge delta from historical perspective in that regard. And it's not surprising that the months of inventory that we have today is a little over 4 months, whereas back then in June of 2019, the months of inventory was just slightly over 2 months. And also it's not surprising that back then we had a seller's market, and today we find ourselves in a buyer's market. In sort of looking at the overall market and the way it's performing, and given the fact that we've come to the end of the first half of the year, I should point out that as we hit the midpoint in the year, we actually have outdistanced 2025 in terms of the number of reported sales. At the end of June, year to date, there were 31,149 reported sales. Last year at that time, there were only 30,800 reported sales. So slightly ahead of last year, and this is the first time that we've seen that in some time. Last year at the end of the year, in total, there were 62,300 odd properties that were reported sold. If we continue at this pace, we should see at least 63,000, if not 64,000 properties reported sold. Again, a modest improvement, but an improvement nonetheless, and we should look to the positive, because I think this is an indication that we may have threshold and are moving to a much more positive and accelerated market as we get through 2026 and then into 2027. To put those numbers into perspective, though, I went back to 1996. And in 1996, there were 65,700 properties reported sold. So even with my most optimistic assessment of what we're going to do in 2026, we still won't even achieve what we achieved 3 decades ago. So positive report because we're improving, but we must keep in mind that that is a modest improvement. But it's a modest improvement that's going to get better as we move through the rest of 2026. And I look forward to being here to provide you with the market reports from now until the end of the year. Thank you very much.